pack, that is where concerns are coming in. Of course, be it input pricing, or even you could say the management changes are happening. A lot of moving factors are there. In fact, if you talk about the FMCG index, this is one of the worst months since the year 2004. Of course, there has been some gainers, especially in the alcobev industry, but the valuations become quite cheap. And to understand more about the FMCG pack, and is there any valuation at play, or what's stressing this entire industry, we are having Abneesh with us. So good afternoon, Abneesh. It's always a pleasure to have you with us. FMCG, lot of, you could say headwinds are coming. How do you see that?
Yeah, hi, good afternoon. So yes, we are positive on Q2 results for most of the names. So yes, you're right. Last few weeks and months, except 4-5 names in that pack, which have done quite well. Most of the other names have seen quite muted stock performance. So 4-5 stocks which have done quite well, in fact, are our top buy calls also. So those are essentially Marico, Nestle, Pidilite, Radico Khaitan. These 4 stocks have done quite well and not far away from their all-time highs and trading at premium multiple. So what we have seen is 3 things. Yes, market is worried on the El Nino. So currently, as we speak, El Nino, the deficit is around 11%. But clearly, rains in the near term again are picking up as per the latest cloud scenario. I think overall there will be a deficit. But what we have studied in the last 10 years, the correlation between the El Nino deficit in rains and volume slowdown, demand slowdown in FMCG is not great, either this year or the next year, because there are multiple things, right? If you see any state government which has elections, they offer 2,000, 3,000 rupees stimulus programs, plus definitely a lot of crop inflation is going to help. Currently, if you see the sugar inflation and the onion inflation, that will lead to a lot of the agri income also going up. So it is never so simple that, okay, it's a El Nino, then the demand goes bad. In fact, in Q2, my sense is most of the FMCG companies will continue to see slight acceleration in terms of sales growth, because in terms of pricing growth, slightly higher pricing growth will come through in Q2 versus Q1, because Q1 it was during the quarter the price hikes happened, while in Q2 it's there from the day one. In terms of volumes, again, if you see, most companies are doing multi-year high volumes. I think broadly that will continue. So I think it's a case of El Nino. Second issue, most of the large caps, if you see across any sector, you take it, banks, in terms of real estate, IT, and any industrials, most of the large caps, in fact, have not done well. Conglomerates, most are trading at a multi-year low. I think that's true for FMCG also, because clearly what we are seeing is there is more of outperformance from the mid caps, small caps. Third will be, of course, crude oil, right? Currently, as we speak, again, because of the geopolitical issue, crude oil has gone up. Plus, definitely some raw materials like sugar are going to impact some of the food companies like Britannia. So that's a genuine concern. Yes.
And Abneesh, what will be the silver lining here? You're stating that the Q2 numbers would be decent enough here, but let's just break it down into urban as well as rural consumptions and how things are coming out. There's more stability coming back in urban segment.
Yes, urban consumption, we are seeing a lot of good demand across the board. If I see QSR, clearly the recovery in Q1 was there for most of the companies, and outlook is also looking like next 2-3 quarters, we should expect that recovery to continue, because this was the first quarter. Paints, again, if you see, almost all companies saw strong double-digit sales growth. Alcobev, again, Radico Khaitans of the world saw very strong growth. They upgraded the guidance, and I can keep continuing. So urban is doing well. Rural currently is doing quite well. I don't think any company is saying that rural currently is a big challenge. Maybe 1 or 2 exceptions, but broader theme is rural is currently doing well. Question is in Q3, Q4, when the real impact of El Nino, because there's a lagged impact, right, always. Then what is the scenario? As I said, we have not seen last 10 years a big correlation. Currently, yes. So that's why if someone wants to bet on the El Nino impact, I think urban space will be better. So that's why we like Alcobev, we like paints also, we like QSR definitely, and restaurant brands Asia will be our top pick there. But generally QSR, we are expecting recovery.
Got it. Abneesh, good afternoon. It's Puneet this side. And just a very quick question, because you mentioned some of the picks as well. You also mentioned that some counters that have done actually very well, Radico Khaitan, Nestle, Marico and United Spirits, and we showed that on screen as well. But do you feel that these winners are supposed to be ridden still from these current levels? Would you buy within these names as well, or because we've also put together some data that the counters that are not done well, like GCPL, like Varun Beverages as well, they have the highest return potential according to Bloomberg. But you've seen some of the other key challenges for all those players, right? Either management change or competition. So how are you looking at further deployment of cash at this point of time within the space?
So two buckets, good question. On the four, both in the respective segment, I would say that fresh allocations should not be done because those are sitting at very high multiples. So you should ride out the Q2 growth, but not put fresh allocation. In terms of fresh allocation, I think some part can be definitely put in QSR because this is the first quarter recovery, and Mrs. Bector's, which does the back-end manufacturing for many QSRs, they have really highlighted that this is a new trend, and generally in consumption, new trend continues for a year. So that's why 3 more quarters of QSR good performance should continue. Of course, we have to see what the regulator like FSAI or Tukaram, etc. are doing, because that can put some impact on the customer sentiment, right? If daily some kind of an issue is being found in restaurant or this pizza outlet, that burger outlet, I will be watching that. But currently that seems to be more of a concentrated news rather than the pan-India news. So yes, from a stocks which have not done well, QSR could be one. QSR, if you see, still 3 year, they have not given any return, right? Yes, last 6 months. Apart from that, in FMCG, I think Colgate, that management change is done, plus numbers should be good. My sense is 15% plus sales growth is possible. Secondly, HUL, right? HUL, again, if I see, my sense is Q2 should be around 11 to 12% sales growth. Varun and GCPL, valuation comfort is high, but Q2, I don't expect a big recovery. There, we still have to wait it out.
Got it. Well, Abneesh, I think in your 20 years of tracking the sector, I think this is the first time where there are new challenges, as you mentioned, the Tukaram Monday effect as well as the FSAI. But thank you so much for joining in today, giving us your view across a whole bunch of stocks and spaces. Well, we appreciate your inputs and you joining in to NT Profit as well. But viewers, out of time on this edition of the show, from Sharan, myself, everybody who put the show together, thanks so much for watching. Stay tuned, a lot more action on the other side.